afternoon. Thanks for tuning in. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Well, these are the top headlines that we're tracking at this hour. It's a steady day of trade for the markets. The Nifty trades around the 10,550 mark, and most of the sectoral indices, barring the private banking space, trades in green. IndusInd Bank falls off the day's high after it reports a 1,350 crore NPA divergence for FY17. Fortis Healthcare surges after Bermans and Munjal sweetened their bid by 250 crore rupees. This after IHH also revised their offer last evening. And TCS will be the second IT major to report its fourth quarter earnings later today.
And that will be one interesting thing to watch out for in addition to Fortis and if in and around the post-market hours. But anyways, thanks for tuning in to Countdown. The markets have stayed steady. It's been absolutely at these levels, about 30 odd points for the Nifty, about a 0.25% for the Sensex, and the Nifty Bank lying very, very dormant at that flattish mark. So hardly any movement for the Nifty Bank. As you can see, it's bordering this average line throughout the trading day today. So hardly any movement from the three indices after where they started off during the trading session today. The mid caps and the small caps too, I don't think have shown too much of volatility. Yes, there are enough and more pockets, and the small cap index is higher than where it was at the start of the trading day, but nothing too dramatic really. The heat map first, and then we'll speak about what's trending today. You will see a fair bit of green, but as you can see, a clutch of names which are very, very flat, and then some winners at the top end, which include the commodity names, and to an extent ITC was somewhere out there at the start of the trading day, and the oil marketing companies which are lying at the bottom of the screen. Just two stocks though, keep in mind, these two. One of them is Titan, which is down about 2.5%. The bigger one is Ultratech, 3.5% today after a 1.5% move yesterday. So Ultratech is really doing well. Cement stock, ACC came out good numbers, but doesn't really have to move this way. But Ultratech is certainly having a really good session the last 2 or 3 sessions. But what's trending today? That's the key question. I think commodities rule the roost, yes, and those are the pockets that form the center stage of the move on the Nifty today. So we've spoken about what's happened on the index, the likes of Vedanta, Hindalco, etc. But non-index too, Nalco, JSPL, Steel Authority of India, all of them have had a fairly good move in the session today. That aside, we've seen the complete decimation of OMCs, yes, but that aside, stocks like MRPL, Castrol, Berger, I thought there was some commonality in terms of crude price movement and the impact that it has on all of these. So these stocks are down in trade, and then strictly the mid cap and the small cap end of the market, I think PSU stocks are abuzz. So Hindustan Copper, STC, MMTC, these are having a really good session in trade today. Navneet, what are you spotting in the liquid universe?
Neeraj, if you look at Nifty, that's still holding on to its gain and trading above the mark of 10,550. It is the Bank Nifty, let me remind our viewers, which is going to remain in focus, as today is the day when the Bank Nifty weekly options expire. But most importantly, if you look at the Nifty Bank futures, there's been a rise of nearly 13%. The premium is higher by 15 points. Those are the futures, but the options contract, they expire. Overall, if you look at the volatility in today's session, that's cooled off, so that's a positive sign. I would call it. The India VIX right now is almost at day's low with cuts of almost 2.5%. Let's look at the option strike that are active in today's session. From the Nifty side, you've got the 10,600 call strike, which has seen some bit of writing coming about in today's session. Almost 5 lakh shares has been added for this strike. And if you look at the put side, the writing continues on the 10,500 strike. So that's added nearly 10 lakh shares. So the next range to be watched out on Nifty would be 10,600 on the upside, but the kind of call writing that we're seeing, it could be a difficult task. For Bank Nifty, which has been trading flat on this expiry day, if you look at the 25,100, both the call as well as the put strikes, they've seen some bit of addition, and if you go by the premium on these strikes, it looks like it could be a range of nearly 200 points. So 25,000 on the downside, watch out for that, and on the upside, watch out for 25,200 for Bank Nifty towards the end of the session. Let me take you through a couple of stock futures that are active in today's session, and I have to mention metal companies. Nalco is the one which has gone up in very high volumes on the cash side, so do watch out for the delivery data. But look at the April futures, 27% higher, which is telling you that the traders are still taking fresh positions on the long side for Nalco. Also, if you look at Apollo Hospital, interestingly, this counter has moved higher in today's trade. It's trading with gains of nearly 4%, but the open interest is down about 13%. That tells you some bit of short covering has been taking in this counter in today's trade, and that's Apollo Hospital, which trades around the range of 1118.
Well, so clutch of those names to watch out for. Just want to mark IndusInd Bank as well. After the numbers and after the press conference, the numbers came out and you wouldn't expect anything different, but about a couple of percentage points lower for IndusInd Bank in the session today, 1806. No alarm bells, though, to be honest. But let's get your market voice. Harendra Kumar, MD of Institutional Equities at Elara Capital, joins us right now on the show. Harendra, good afternoon, and thanks for joining us on Bloomberg Quint. This is Neeraj here. What's been happening and what's the advice, what's the kind of activity that's happening at Elara Capital? Because the last 10 days, the move, as strong as it has also been surprising. I mean, I don't think too many people anticipated such a swift pullback in the markets, looking at all the geopolitical tensions and the trade war talk that was going on.
Yeah, Neeraj, good to hear from you again. So the point is that I think we've been lucky to capture the bottom. Our view was that, closer to 9,800, the earnings yield of the Sensex would have turned attractive. And there was a good point where fundamental analysts would tend to look at it. And clearly, since that the level held, that means we are pretty much in the continuing bull cycle mode. But what is important to note is the participants and the constituents are changing. So you see ownership of the previous rally, which is NBFCs and OMCs, cracking. And you're seeing a new set of stocks that are moving up, which is the consumers, you have autos and metals. So these are all reflationary-led cycle stocks, which means that the broader economic recovery is on and people want to trade these stocks.
Harendra, let me talk about the earnings season then. When we had a big number from the banking pack coming just a while back in IndusInd Bank, though the numbers were pretty much in line what the street was estimating. The credit cost for the year remained just about flattish, around 62 basis points. That's what the management highlighted. I think one factor which has led the stock lower in today's session is the divergence which they've reported this time around, and that's also owing to the exposure that they had to one of the jewelry account. But if the management commentary is to go by, Harendra, they've clearly said that they're not waiting like the other banks. They've already classified that account as an NPA and fraud. But do you see this trend continuing for the other banks for the fourth quarter earnings?
Yeah, pretty much. I think the banking sector is running twin risks. One is on performance and one is on over ownership. I think around 38 to 40% of the entire mutual fund industry is owning financial stocks. So any potential bad news means the stocks will sell off significantly. So the only set where you can hide is potentially HDFC Bank, Kotak, and an IndusInd. So we would not be too overly worried on IndusInd Bank. But yes, about some of the other quasi-private banks, which is you can say ICICI or Axis Bank, and some of the PSU names, we would still stay away from them at the moment.
Okay, Harendra, just, the last few days, both me and Navneet have been debating with a bunch of guests who come at this time around on the show about what's happening with spaces which are getting those premium valuations and with some pockets which are not. Now, consumers and if autos can be considered as an extension of consumers as well, we've seen the rally continue unabated. Yes, the growth numbers seem to be right out there, but you probably will agree that in a lot of cases, a lot of stocks are trading above what were anyways expensive valuations, but much higher than what the last 3-year averages have been. I mean, HUL is a case in point. Some of the other, maybe a couple of auto companies are cases in point as well. What is the stance of Elara Capital out here? And what do you think is, and how far out can you look at it in terms of the earnings momentum continuing for these spaces? Next 2-3 years or probably longer?
It's a decadal story, Neeraj. I think consumers are going in through a big bull run and they will lead the market rally. So India is one of the countries which has the demographic bounty. And along with that, you have the structural triggers in GST and a humongous rural stimulus by the government. So you're going to have volume growth, you're going to have margin expansion, and these are companies that have tremendous high-end ROICs or ROCEs, which means that for every 1% increase in sales, the PE multiples expands further. So we would not be too worried on the PE multiples. And the global investors are looking at companies that can play this demographic dividend. So for us, consumers are fundamentally long buys. Autos as well fall in the same pack. Nowhere in the world you have companies which have 50% market share in such a large market. So, for example, Maruti. So I think on both these packs, they are taking the, what you say, the context of staples. So you own a car because you have to own a car. So P multiples would get ignored. I think they are entering a new bull trajectory.
Interesting. So here's the dichotomy, right, Harendra? At one end, you probably have an HUL, which at about 55, 56, or whatever depending on your earning estimate 1 year forward, you can assign the multiple anywhere between 52, 53 to about 58, 59. I've seen varied estimates out here, which is trading well above its 3-year averages. Then you have an ITC, which suddenly, because of maybe the hotel business starting to do well, or the commodity stock starting, or rather the commodity cost starting to come off a bit, has started to rev up in trade. Today, for example, we were talking to the management of Priya Gold, unlisted as they may be, but he's talking about a 15% volume growth in the biscuit segment for FY19 average. So sure, the growth is there, but we have dichotomy even amongst the large cap staple names. Where would you think the market find favor from a 1 year or 2 year perspective within this pocket?
You clearly need to be with the leaders, because when the market size doubles, it's the leaders who grow faster. And more than the P&L, they are balance sheet stories, because they are huge value drivers in terms of return ratios. Coming to ITC, I don't think it's the hotels or the paper which is driving valuations. I think the stock is so beaten down, the under ownership is so heavy currently, that as the consumer trade picks up, ITC looks more and more attractive. So frankly, what you're seeing now is a catch-up trade. So for the short term, it's ITC. Over the longer term, it's HUL.
Okay. Short term is ITC, and remember that stock has underperformed the Nifty FMCG index in the recent past. That overhang of taxation regarding the cigarette segment, which contributes nearly 80% to its bottom line, has been a concern. Harendra, the other segment I want to talk about is metals, which is in focus, and the reason by now we all know that the commodity prices have been inching higher, be it the aluminum prices, which have seen a substantial increase from the $2,000 to almost $25,000 per ton. I just want to check if you've advised your clients to buy into any of these commodity stocks which are going up. Do you think this would be the right time to book profits, or do you expect this rally to continue?
I think we're just entering a fresh cycle. So if you see that, we had come out with the inflection report highlighting the big metals rally closer to June last year. I think the construct of this rally remains so. A dollar weakness, emerging market rally, and a rally in commodities is the framework for the next bull run. And within that, I think the metals are the strongest pack. You could have seen that even in the recent correction, the metal prices and LME bounced back pretty strongly. Global growth is holding, and India is much more favorable. So I think starting with non-ferrous and Hindalco and Vedanta, they are very attractive. Vedanta is our preferred bet, followed by the steel pack. I think they will create alpha, but they will have a lot of volatility as well, given that they are very high beta stock. But I think every correction in metals needs to be bought into.
But do you think, going with the current trend, the non-ferrous space is likely to outperform?
Non-ferrous has smaller deltas because the aluminum price and zinc prices are pretty much priced in. But the bigger trade is in copper. You mentioned Hindustan Copper as well. But that is the only pure play copper play in India that is listed. I think beyond that, steel would have longer structural buys because of the demand and pricing deltas that you see.
Okay. Harendra, this morning we were chatting with the management of VIP. It was very bullish. Again, a consumption theme, very bullish about what they are doing. And you know, management after management, which kind of get benefited by this aviation boom, talk about how amazing it is on an economic front for their business to see the kind of growth that we're seeing in passenger traffic. This morning we were talking about how InterGlobe Aviation has surprised everybody despite having a sluggish airplane situation in the month of March to have the market share that they have had. What are your views here on this pocket? And it might be a difficult call, but between the three, do you guys at Elara have a favorite? And if so, why?
So clearly, you know, aviation is still buy. Again, we keep telling people that it's no longer the volatile or cyclical story that you used to see earlier. It's becoming a habit, flying. You know, from a single flight, potentially a family would take 2 or 3 progressively. And as per capita income goes up, that will become a default way of traveling. Within that, I think Spicejet is our topic. Yeah, it's a fantastic turnaround story. It's managing its routes very well, and yields are also picking up. So between the 3, Spice is our topic. I think it has a potential 30–40% upside from here, even now.
I mean, is there a reason why you choose Spicejet over an InterGlobe Aviation for that? For example, because somehow it's ticking all the right boxes. It is InterGlobe on either the passenger traffic or the market share or managing costs. I mean, why a Spicejet over an InterGlobe?
Because purely the route strategy of Spicejet is superior to that of an Indigo. And the delta coming up from a route strategy which is driven on your tier 2 towns is more superior to a Mumbai, potentially a Mumbai-Delhi kind of a strategy. So Indigo is operating at very high levels of efficiency, whereas the operating leverage in Delta is very high in Spicejet. So clearly, in terms of alpha generation, you know, Spicejet would be on higher grounds than Indigo.
All right, but with the recent crude prices inching higher, they could pose some bit of threat. Remember, 30–40% of the operating cost for all these airlines is the ATF prices. Thanks a lot, Harendra, for joining us today and taking us through your views on the markets. Well, moving on and talking about Fortis Healthcare, a stock which is one of the most sought after acquisition target right now. Existing bidders are revising their offer and new ones are joining the race. All this may end today, though, if the board can narrow down on one bid. Well, Yatin's here to take us through all the details. Yatin, let's first make a quick recap of the timeline before we get to the individual bids here.
Well, if you look at the entire process, it started in the fag end of March, wherein Manipal, they were the first ones to express interest, as far as the Fortis Healthcare assets are concerned. So, somewhere in the end of March, closer to 23rd March, Manipal made an unsolicited bid for Fortis Healthcare. Of course, it was a complex transaction in which they had to demerge the hospital business, spin it off, and also, look at the diagnostics business. We had March 28th, wherein the plan was approved by the board, and we had a specific shareholder approval which was required for the entire transaction to consummate. Of course, moving forward, in the second week of April, we had Manipal Health, which revised the offer after investors red flagged the entire transaction and the valuation assigned. Of course, the valuation was revised upwards by nearly 20% for the entire entity, including the hospitals business. Surprisingly, on April 12th, exactly 2 days after Manipal revised its bid, we had the Hero Group and the Dabur Group, their family offices, and the promoters' family offices made a binding offer for infusion of close to 1,250 crores. Of course, it was subject to due diligence when it comes to the larger amount. April 13th, 1 day after, the Burman family and the Munjal family came out with an offer. IHH also made an offer, an unsolicited bid at a price of 160 rupees per share. That was a fair valuation that the company sought for the transaction. We had the Chinese healthcare major Fosun also making a non-binding offer for Fortis Healthcare at a price of 156 rupees per share. That was a valuation assigned by Fosun. And now on April 18th, which is yesterday, we had the minority shareholders looking to remove 4 old board members and appoint 3 new independent directors. And this is something which means that investors have probably lost confidence in the board, and not only that, the kind of transactions or the bids which are coming in, probably shareholders want to have a better control and better independence when it comes to evaluation of offers. Of course, April 18th, we had IHH which revised the structure of the offer, which was basically infusing funds at a price of close to 160 rupees per share and infuse up to 4,000 crores. Of course, they have not made it clear whether the 4,000 crores comes in from equity, but if that amount were to come via equity, then it would trigger a fresh open offer. April 19th, which is today, and we spoke with the Hero Group chairman as well. He said that they have to revise the bid offering because they feel that the company is under severe crash crunch and would require some funds immediately. So they raised the earlier 1,250 crores outlay to a 1,500 crore outlay, all of it which was equity and convertible equity, and 500 crores will come in immediately into the company via the preferential issue, and 250 crores via the 25% margin money for the warrants issue. And today we have the all-important Fortis board meeting, wherein they will be deciding as to what steps to take forward when it comes to the interested parties and their bids, and more importantly, the notice of EGM which has been sent by minority shareholders, which include marquee funds, and how to take that forward as well, because a 4-member directorship is on stake. So that is something which will be important for Fortis Healthcare at this point in time.
Yatin, well, these were the timelines, but as you mentioned, the board meeting is lined up today, and the board has a big task to assess so many bids and the revisions which have come by.
So if you look at the revision, of course, we'll talk about the Manipal, old and new offer. So the old offer from Manipal was basically valuing the hospital business as 5,003 crore. The Manipal and TPG combined will put in close to 3,900 crore directly into the company, thereby diluting the current shareholders of Fortis Healthcare significantly. And also they propose to buy 20% in SRL Labs at a consideration of 720 crores. They revised the entire transaction. They upped the hospital chain valuation to close to 6,061 crores. No direct infusion would be made by Manipal Group or TPG. They would be doing a rights issue of up to 4,000 crores, which protects interest of the current shareholders of Fortis Healthcare, because they will be able to participate. No share purchase in SRL, and more importantly, SRL will be merged into the demerged entity, thereby making a listing possible as and when the scheme of arrangement takes place. But a significantly complex deal, does not entail any open offer. Also, we have the Burman and the Munjal's offer. Earlier offer was 1,250 crores by investment subject to due diligence. Today they said that 500 crores from preferential issue at a price of 156 rupees per share, 1,000 crores via the warrants issue at a price of 161 rupees 60 paise, which is highest among what has been offered so far. And more importantly, they have waived off the due diligence requirement, and that is the key takeaway. No due diligence. Here is the money. So the entire outlay has been 1,500 crores, which helps them acquire close to 18-20% of total equity. And also they said that they will be further supporting any kind of funding requirement which arises due to acquisition of RST assets or normal business course. Of course, after Burmans and Munjals, we also have the IHH offer. Earlier they said that the valuation should be done at a price of 160 rupees per share, but now they say that 4,000 crores is what they are willing to commit, given the fact that if the full due diligence happen, and as I said earlier, the infusion can lead to an open offer if all of it comes via the equity route. And also we have the Fosun offer, which has come in at 156 rupees per share, but they have made no formal revision as far as the transaction is concerned.
Okay, so there's a big task ahead of the board, but once again, the irony is that you have certain minority shareholders from the likes of Eastridge. I remember reading one of the reports which said that they've also asked the activist investor Elliott also to participate with them to ask for an EGM to remove four directors.
Clearly, Navneet, and having so many bidders or suitors, for the Fortis Healthcare transaction, minority shareholders are clearly not happy with the kind of situation the board is currently handling. They are not probably satisfied with the valuation, and that is the reason why we have Jupiter India Fund, Eastbridge Capital, two marquee investors which hold nearly 12% equity when they have disclosed to the stock exchanges that they want to remove 4 directors of Fortis Healthcare and replace them with 3 independent directors of their choice. So, we have the next slide which says that, Mr. Tempest, Harpal Singh, Sabina, she was recently appointed as an independent director on the board. Tejinder Singh, Shergill, all of these 4 directors are proposed to be removed in the EGM. Of course, this is subject to shareholders' approval, and they will be replacing them with 3 new independent directors, which also have been mentioned. So clearly it is a tricky situation. On one hand, you have bidders coming in, the board is evaluating proposals, and on the other hand, you have the minority shareholders which are not clearly impressed with the handling of the entire situation by the board, and probably they want to remove them and replace them with their own people so that the situation can turn favorable to their minority shareholders and their investors.
Well, thanks a lot, Yatin, for bringing all those details with regard to Fortis Healthcare Accounter, which is going to be in focus in today's trading session as well. It's trading with gains of 1%, but remember the board meeting is lined up. And Neeraj, I remember one of the reports also stated now that there are a lot of bids, and that time only there was one bid which had come from Manipal, that these minority shareholders who've been asking to remove a couple of directors and ask for a special EGM, they could also ask for a bidding process then. And if that happens, I think that's going to be the trigger, because then maybe the pricing could even inch high. I think the last pricing which has come in, which is on the higher side, is 160 rupees per share, but we don't know yet. That's what they want to do. And Elliott, that's one of the big hedge funds, which is an activist investor as well. I think Eastbridge has, they have approached them also to participate with them. But in the whole scheme of things, we don't know what Yes Bank is doing here. I think they're one of the largest shareholders currently.
Yeah, I think, so frankly, there are a lot of unanswered questions. The conversation this morning with Sunilkant Munjal also, it was interesting. They're coming out with an offer which he thought, for example, was something that the Fortis shareholders could tilt towards. But I know there are a lot of moving pieces out here. It just remains very, very difficult. Let's see. The board and decisions not just on which offer is the board tilting towards, but a lot of other things will be getting announced today. What we also hear, Navneet, by the way, is that while the expectations are that the announcement should come in sometime post market hours, there is an outside chance that it could get delayed for a really long time, and it could actually happen way post market hours, so maybe to the tune of 7 or 8 p.m. as well.
Yeah, so it's quite contradictory. You have a board meeting. What if the board actually takes up, they take a decision, and then they have to replace the directors? What's the point of having a board meeting at this juncture to come out with any sort of decision? But let's see what actually comes out from that today. We'll get a better clarity actually post the meeting. Yeah, let's wait and watch. Anyways, maybe we should, it's 2:30 already, so maybe we should get in our experts on board and try and figure out how are they approaching trade this afternoon before we hear out from market voices. At some point of time, we'll also make you hear what Nilesh Shah of Envision Capital was talking about. But if we have our guests for the afternoon on air already, we should try and get them on board. As we speak, the Nifty Bank lying marginally off. The Sensex has come down a little bit, about 49 odd points. And it's the same set of stocks, the OMCs which are down and the commodity names which are up in the session today. Okay, I think we have our technical experts on board. Brijesh Singh of StockAxis Mumbai would be on the show as well. In moments from now, we'll also get in Bala of Cash the Chaos, and Chokkalingam will be joining us on the fundamentals as well. Let's start off with a quick thought on the structure of the markets. Brijesh Singh with us. Brijesh, good having you. Thanks so much for joining in. What are you doing on the indices currently? About 24, 25 odd points higher for the Nifty. Is it a good day to initiate some trading positions, either direction, on the Nifty or the Nifty Bank?
Good afternoon. See, right now, if we talk about, since today has been expiry and Nifty has been trading in a very narrow range of 10,525 or say 10,535, and on the higher side 10,565 to 10,570. So it's been a narrow range. But what I have been found out from a chart, like the daily chart as well as the hourly chart, they are not giving any negative indication right now. So any dip should be used for a purpose. As a trader, if we talk about, then 10,420 to 10,440 is a support. If this holds on, then the rally would be continuing. But as a aggressive trader, what one can take an initiative in a Nifty if Nifty comes around 10,535, one can take a buy call in it with keeping a stop loss of 10,500 and looking for the target of 10,580 to 585. And if 85 crosses and holds on there for say 10-15 minutes, then the short covering can pull the rally of the Nifty to 10,620 to 10,625.
Okay, that's a buy call coming in on Nifty on any sort of dips. But Brijesh, in terms of individual stocks for the day, what are you recommending in trade?
See, I'll go with the FMCG sector, that is ITC. What I have been found out, like from the past 1 week, the ITC, after making a base of at around 260 to 265, it has significantly bounced with increase in volume. Roughly around 5% increase has been found from a low level. And if it comes somewhere around 275, one can take a buy call in it with keeping a stop loss 267 and looking for the target of 295 to 298. This I'm looking for in a couple of week time frame. It has a mild resistance somewhere around 280 to 282 zone. If this thing crosses, then it can the stock can jump to the level which I have mentioned, 295 to 298. So one thing is that, and another counter which I am looking would be a Hindalco. After making a base at around a 200 level, and on a daily chart it has formed a runaway gap formation has been there with increase in volume. So it indicates that strong indications have been there for the bull side. So somewhere around 258 would be a buy call. Yeah, stop loss would be 247. The first target which I am looking for would be 275 to 277. And if rally continues, then it can even touch 295. This is I'm looking within a 10 to 15 trading session.
Okay, that's a buy call coming in on Hindalco as well as ITC. Let's also bring in Bala, Chief Market Technician at cashthechaos.com, who joins us on the show right now. Hi Jay, thanks for joining us. Well, today the markets are a little bit muted. Nifty is still about trading in the green, but the sort of rally we've seen in the last 11 to 12 trading session, recovery of 400 to 450 points. Do you think this rally will continue, and the resistance mark of 10,700, which most of the analysts have been talking about, can we cross that?
Yeah, to me, the resistance comes in at about 10,625, and I think market's likely to see some sort of a extreme short-term dip from there, and that should be something that needs to be bought in. I'm of the opinion that the market is heading for record highs. It's a reasonably good possibility. I've been saying that for the last couple of weeks, and so watch out for the dips. The dips are likely to be very shallow. We've already seen two dips. One was a one-day dip that lasted just for a couple of hours. Another one was an intraday dip. Even that got bought into. So watch out. Even the global macros are playing out as expected. I had expected crude to come back somewhere close to 80 in the medium term. I was repeating all through November and December that crude is heading for 85. So even the US markets have much more upside left to play out in the short to medium term. And given that I don't know where this short-term top is going to be for the Nifty. So there is, as I said last week, there's more legs to this rally than you can actually visualize.
Okay, let's see if there are more legs to this rally or not. But Jay, in terms of individual stocks, what are you tracking?
Yeah, if you've been buying IT, as I've been suggesting every week since February, you'd be minting money at this point of time. And I still have more picks coming from the IT sector. First, I'll go for Take Solutions. This is an important chart. If you pull up the chart of Take Solutions on your screen, you'll see that this stock on a daily time frame was going horizontally between 180 and 150, and this was between October and April, and then it broke out above 180, went somewhere close to 200, and then came back and retested the 180 mark, and then now it's broken out above the 52-week highs. This is a very, very important pattern. This had a very long-term consolidation on a short term as well as on a medium term, and this has potential to scale at least another 50% from current support levels, and the stops should be placed somewhere below 180, and there's a strong possibility that it might even overshoot the price objective of 300. And the second individual stock I have is Glenmark. This is a medium-term pick, and if you pull up the chart on your Bloomberg terminal, GNP, INW, RSI, you will see that this stock has been providing multiple divergence, in fact quadruple positive divergence. If you look at from the September lows to the December low and the February low, we got each of the lows have been disagreed by momentum, and the momentum is rising. This is saying that some smart money is accumulating into the stock in a very, very big way, and this is going to have an explosive move, and this is in my opinion is likely to be a three-bagger. And if you want to have a precedence and see what happened, if you look at the charts of GM Breweries, which I spoke about when it was about 400, the picture was very similar. If you go back to 2013, if you look at Tata Elxsi, at 2013, the lows around 100 and change was very similar to it, and then it had an explosive rally. So watch out for this. This is a very, very important pattern of quadruple divergence on the RSI is very, very rare, and once the stock starts to move, maybe in the next couple of days, you can be sure that this is making a very important step for the medium term.
And look at those target numbers that Jay Bala is giving on Glenmark Pharma. Something, remember, fundamentally needs to change for the stock to achieve that the kind of levels that the charts seem to be showing. Let's ask Mr. G. Chokkalingam if something like that could happen. Lots of stocks in news as well, but just an initial thought, since we're talking about some stiff targets on Glenmark and maybe certain pharma stocks. Mr. Chokkalingam, thanks for joining in. Fundamentally, is there a case for, as things stand and as you can see things, is there merit in trying and owning a Glenmark Pharma or a Lupin or some of the other pharma names?
Certainly, yes, I feel. No doubt these pharma companies are having problem, but the fact is that the market is overreacting to the adverse news. The punishment is more than what they deserve fundamentally. This happened last year to Infosys. Now it is happening to HPCL, Lupin. But I'm pretty confident that all these large pharma companies, they would get back their normal status in a matter of 12 to 18 months, and then again they will come back to the growth. But it will not be like what we saw 3-4 years back. There is a pressure on the price realization in the US market, but certainly it won't be the kind of marginal growth now they're having. That won't continue forever. So definitely one can buy stocks like Glenmark and Lupin. At least one can hope to get 15-20% upside in a year's time.
Interesting. Okay, Mr. Chokkalingam, what are you doing with the oil marketing companies? There are conflicting views. Brokerages believe they're worth owning. Certain brokerages believe they're not worth owning. What are your thoughts here?
Yeah, we did buy HPCL, at around 380, 390. So we have been going wrong, but I am not worried much. In fact, I am using this opportunity to average down more. Because we have seen oil price $140, we have seen $114 in 2014. It is not that all automobiles stopped running on the road, but if you look at the kind of punishment you are seeing for OMCs, which are down as high as 40% from the peak, it gives a lot of fear. But I think the fear is exaggerated. Definitely, the government will not go back on economic reform, in the sense they will not ask the oil companies to take the burden. It would be a very adverse development. It will destroy the confidence of the foreign investors if government goes back on economic reform. And secondly, I have firm view that oil price will crack. We have seen US deploying a record number of rigs. We have seen a report of Bahrain finding a record level of reserves. And Russia has a problem of sanctions, so it has to produce more oil to compensate for the loss of income due to the sanctions. So I have the view that even the trade war would lead to contraction of global growth. So all this would augur well for cracking of oil sometime, and therefore I would use this opportunity to quite aggressively reduce the average cost of oil marketing companies like HPCL.
Okay, Jay, just wondering, BP, HP, IOC, fairly liquid names. What would you do if you didn't have a trade right now or an existing trade? Would you initiate any kind of fresh trades here?
Yeah, I will wait for a small rise to short these stocks, and they are looking horrible on the charts. And let me tell you this: I won't be surprised if I see 200 on Hind Petro, and something close to 280 to 300 on BPCL. And any rise from here is going to be a shorting opportunity. And coming to Brent, I see another. It was about, I checked about 10-15 minutes ago. It was about 74.35, and there is another $1 to $3 upside in this leg of the move. So once it does that, there's going to be a short-term correction. That's going to be mistaken for a change in trend. And once that is done, we'll see a pullback, maybe something close to maybe even 65. If you recall, this is exactly what happened in February. I was there on your channel on the 8th of February, and the Brent fell from 71 to 61, a $10 drop. And I said, I reiterate the call that Brent is heading to 85. This is going to be something slightly different, but the form will be pretty similar, and you're going to have further upsides for Brent and further downsides for Brent. And if you recall from our December conversation, where I had advised pair trade, rupee neutral strategy on the upstream oil company being long and short on the downstream oil companies, that has produced at least 25% returns at this point of time, on my last check on yesterday's close. So that's the pair trade strategy that's working for you. Continue to be negative on the downstream oil companies.
Okay. Brijesh, are you, on either existing trades or new trades, are you doing anything on the OMCs?
See, no doubt HP or BP or even IOC right now, they are been trading and making a new 50-week low. But comparatively, HPCL chart is a little bit stronger. It sounds right now it's been trading somewhere on 299. So I was been looking on a monthly chart. The stock has rallied from a level of 141 low that was on February 2016 till, and it was a one-way rally till a level of 491 in September 2007. If we draw a Fibonacci retracement, the 50% retracement comes at around 315, and 61.1 retracement comes around 273 zone. So the ideal buying level would be somewhere around 275 to 280 zone. And here I'm talking for the investment point of view, somewhere around 9 month plus horizon. If it comes somewhere around below 280, definitely it would be a buy call. Here your downside support would be 240 to 45. And once the stock crosses 315, it can again jump to the level of 350 plus horizon. This I'm looking within a 9 month plus horizon time frame.
Okay, and since we are on the topic of oil marketing companies, and by now we know that how the OMCs have been falling, today is the 5th straight day in a row that we've seen some losses coming about, and the reason for that is the crude prices in the international market, they continue to inch high. But what are the concerns plaguing the companies back home? Somit Sarkar is here with an analysis on the same. Somit, over to you.
So there are various concerns related to the oil marketing companies. Among the major ones, the first is related to the marketing margins. Now, if you see in the third quarter of financial year 2018, that is during the Gujarat election phase, the gross marketing margins of these three oil marketing companies were under pressure. It was down, it had come down to as much as 1.3 rupees and 1.2 rupees per litre. But post that, there was a rebound, and in the fourth quarter of financial year, it remained strong. Now, going forward, if you see for the next 12 to 15 months, there are various state and national elections that are lined up. And with rising crude oil prices, there are chances that these gross marketing margins of the oil marketing companies would further fall for the next 12 to 15 months because of the state elections and the national elections. Now, if you see the crude oil price, now the crude oil price has remained a bit volatile. Now, with crude oil prices currently at around $74 per barrel and the petroleum subsidy remaining mostly unchanged, there's a possibility that the government might ask these oil marketing companies to share the subsidy burden. So this is an overhang on the oil marketing companies that has been there. Along with this, rising crude oil prices could also put a pressure on the refining margins of the oil marketing companies. Now, if you see on the flip side, if crude oil prices decline from the current levels, then there is a high possibility that the oil marketing companies would report an inventory loss. So be it a rise or fall in the crude oil prices, both will have some impact on the oil marketing companies going forward. Lastly, there have been news reports that ONGC might sell its stake in Indian Oil Corporation to repay the loan that the oil major took to buy government's stake in HPCL. So this has been a consistent overhang on Indian Oil Corporation. Now, after ONGC bought government's stake in HPCL at higher valuation, there's an overhang on Indian Oil Corporation and BPCL that they might buy government's stake in GAIL India at higher valuation. So given the fact these companies, oil marketing companies, have extensive capital expansion plans, any further investment would put a pressure on the capital allocation, which will also mean higher working capital requirement for these oil marketing companies and an increased interest cost. So all in all, weak marketing margins, volatility in the crude oil prices and unfavorable corporate actions are the concerns that are on the oil marketing companies.
Thanks a lot for that, Somit. So that's one set of stocks which are losing out, but look at the gainers. I don't know when was the last time you saw Hindalco up 9%, but 265, 9.25% higher for a Hindalco is just revving up in trade. I think Vedanta 7.25%, and Ultratech Cement, I repeat, Ultratech Cement is the one which is the surprising move, right? 3.8%. I don't know if the SEC volumes are a factor here or something else, but just a splendid move that you're seeing in the commodity-based names. Mr. Chokkalingam, we'll talk about the metal names, yes, but Ultratech Cement, 4% higher. What's happening here?
I don't know the reason, but I would not chase cement stocks now, maybe except Birla Corp, because that's the only stock which gives me a lot of comfort on a fundamental basis. It is trading at around $95 per ton enterprise value to per ton of cement capacity. And I believe the Birla Corp could be a takeover target possibly. And when you look at the valuation of Binani Cement, which is around $140, or even other acquisitions which happened recently, the Birla Corp gives you a lot of comfort. Otherwise, on an earning basis, I will not go and chase cement company, because recently one of the reputed rating agencies has mentioned that in FY19, the cement demand is likely to grow at best only by 5%. So therefore, I will not chase the cement stocks on the basis of earning potential. Rather than I would play it on possible acquisition potential.
Okay, that's the view coming in on the cement pack. I just want to pull up Just Dial, the intraday chart of the same. I think there's been a sudden surge which has come about, and currently the stock is trading around the levels of 474. That's an uptick of nearly 5.5%. Brijesh, on the charts, is there any sort of breakout that you're witnessing for Just Dial?
It has been trading in a range of 438 to 440 on a downside, followed by 488 on a higher side. Now today it has been it has given a breakout and has been trading in above 465. That was a recent swing high. So with this thing indicating like 465 holds on, then one can take a buy call in it for the target of 488 to 490. Anyhow, 488, 490 crosses, then another short covering or pullback rally can be sent to the level of 520.
Big move there in Just Dial as well. In fact, speaking of gainers and losers, just before we dwell on the next topic, which is the commodity names, just trying to look at what stocks have moved at the broader end of the spectrum in the last hour. SCI, I think, has gained a little bit in the last few minutes of trade. Yesterday's loser, SL Propack, has gained quite a bit in the last few minutes of trade. And Rain Industries has recovered a little bit of lost ground, though Radico Khaitan is the other one which has really zoomed in the last few minutes of trade. Look at that chart. SCI up 8%, Rain Industries up 4%, and SL Propack amongst others, which has gone up. Radico Khaitan up 8% as well. Some really strong moves there. Mr. Chokkalingam, are you buying into any of the alcohol companies? Radico Khaitan up 8% at 413. United Breweries yesterday or day before had a sharp run up. Som Distilleries is trading at 265. So a clutch of these names are doing very well for themselves.
Yeah, they are fit for traders. I follow value investing. So at the peak of the valuations, I let the opportunity go and look for a bargain buy. There are many stocks outside, liquor space which look attractive to me. So therefore, I don't chase these alcohol stocks at such high valuation.
Okay, and that's the view. Maybe the valuations are a bit too steep, Mr. Chokkalingam is saying. Watch out, some smart investors got into stocks like Radico Khaitan way earlier, by the way. So there is merit in looking at the valuations and just try and seeing what's the kind of risk reward ratio that you have, as would be the case with the metal companies as well. The chart of the day today speaks about the sensitivity analysis, I presume, for some of the metal names or some of the companies and the alumina names, and the kind of sensitivity that they have to aluminum and alumina prices as well. I think that's the key thing. Before we get to the fundamentals, Bala, what do the charts suggest? The likes of Hindalco, Vedanta, how would you trade them?
Yeah, I continue to be bullish on the metals names, and in particular, I'm a little bit partial to Vedanta. I'm very bullish on the, I've been quite bullish on the pound to the dollar, and I expect pound to take out somewhere close to 1.45, maybe even 1.51. So I think Vedanta will be a big beneficiary of that. And I have as a macro trader, I track the global indices. I have a buy signal on the Australian ASP, SPX 200. So that's probably going to 6,200. So you have a natural resources kind of rally that's playing out. So there are further legs to the metals rally.
Okay, there could be more gains towards the metal counters, which Bala just highlighted. But besides that, the other counter I remember highlighting towards the start of the show is Apollo Hospitals. That's seen gains of almost 4% in today's session. Brijesh, come in here on the charts, 4% higher, almost a day's high at 1121. If somebody had taken a long position in the morning, is it time to book profits?
I'll say hold on, because the double bottom formation has been there on the oscillator on 4-hourly chart, followed by 1100 and 1110 are the important supports. So hold on, the rally would be continuing because the higher lows formation has been there, and it 6.5 would be the first hurdle where the profit booking would be coming. So where one can look at profit booking at that level, or keep a trailing. If suppose someone has been long, then keep a trailing stop loss of 1105 and hold on, because I'm looking stock next week touching 1160.
Okay, Mr. Chokkalingam, before we let you go, an idea from your end. Fundamentally, I presume you believe Jai Bharat Maruti is a good investment candidate.
Yeah, certainly. Stock has come down more than 30% from the peak, but that is not the only reason. It caters to basically Maruti Suzuki. It's an indirect play on Maruti Suzuki. It has come out with a decent results. It's trading at around 12 P on 1 year forward earning. And Maruti is setting up, all of us know that new plants in Gujarat. Adjoining those plants, Jai Bharat Maruti is setting up its own plant. And according to the management, the plant is going to be commissioned this year, which will add a lot of profits. Because first time Jai Bharat Maruti is spending huge capex on this new plant. In FY18, the incremental fixed asset is 42% higher than the cumulative fixed asset the company has. So that is the kind of aggressive expansion the company is doing. And also Maruti has got about 29% stake in the company. That also gives you a lot of comfort and confidence. So therefore, considering the growth opportunity for Maruti Suzuki and the capacity expansion, I firmly believe that this stock can give easily 25-30% return. In 2 to 3 years, it can even become a multi-bagger.
Okay, that's a call coming in on Jai Bharat Maruti from Mr. Chokkalingam. He has a target price of nearly 600 rupees. And before I let you go, actually, Mr. Chokkalingam, just quickly wanted your view on a stock which is buzzing in today's session, and that's Merck. Did you get the time to go through the contours of the deal where P&G is looking to acquire nearly 52% stake in the Indian arm? But the deal is actually on back of the global changes that are taking place between the two companies.
Which company?
Merck.
Okay. No, I have not looked at the valuation. Definitely, it's a great company. Of late, it has done well also. But I'm sorry, I have not looked at the valuation. It's certainly, the stock has not risen substantially. It's a good stock to hold.
Okay, good stock to hold. Mr. Chokkalingam, appreciate you joining us today and taking us through your views on the markets and also giving us your fundamental pick of the day. All right, that was Mr. Chokkalingam. But moving on to the chart of the day, where we were talking about the alumina prices, which are on the rise. And one Indian company that stands to gain the most out of this is National Aluminium. Well, it is also auguring well for the shareholders of this company, as we've seen in today's trading session how the stock price rather, of Nalco has inched higher. But let's go across to Nikki Mirchandani to find out how exactly this changes the game for Nalco's earnings. Nikki, over to you.
Thank you, Navneet, for this one. Well, aluminium stocks as a whole have been on an uptrend in the last 8 trading sessions after the uptick that we've seen in both alumina and aluminium prices, after the US imposed a sanction on Rusal, and also after the curtailment of output in alumina in the world's largest refinery. But reacting to this, or making the most out of this, is Nalco clearly. The stock today has gained 10%, which is its highest or the longest winning streak that we've seen since 2009. Clearly, it has outperform the gains seen by Hindalco that in the 8 days at 13%, and that by Vedanta by almost 8%. So it is an outperformer here. But then what explains this outperformance? Macquarie in its note has related this to the LME prices sensitivity that the company EPS has, since it's an integrated player, which means that it will benefit from both alumina as well as aluminium prices. It has explained that for every 1% change in the alumina prices, the EPS will get impacted by 3.8% for Nalco, 2.1% for Hindalco, and 1.3% that by Vedanta. In fact, for alumina also, it will stand to gain benefited. The EPS will get impacted positively by 2.2% for every percent change in alumina, 0.1 for Hindalco, and a negative of 0.2% for Vedanta, given it's not an integrated player. Back to you guys.
Okay, thanks a lot for that, Nikki. And that's the commodity pack, which is doing just so well in trade. We need to hit into a break. As we head into the break, though, here are Nilesh Shah of Envision Capital, who is bullish on the Tier 2 technology companies, speaking to us on our special series, Alpha Moguls. Nilesh believes that the weakness in the currency will further aid the margins of such companies. Listen into a slice of that conversation. Okay, fine. We'll just get to that conversation in just moments from now. I think there's a bit of a lag out here. But just before maybe we should just get into a break right now. Come back from the break and then try and hear out what Nilesh had to say about the technology companies. Of course, when we come out of the break, we'll also hear about the Fab 4 stocks, talk about dealing room recommendations, and of course, closing strategies from our experts.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Right, welcome back. You're still watching Countdown with us, and the Nifty is still trading around the mark of 10,555. Just to remind our viewers, today is the day when we have the weekly options expiry day for Bank Nifty, so expect a bit of volatility right there. But right now, the Bank Nifty just about holding around that level of 25,100 in trade. I think we have the management of RS Software with us. We've got Mr. Raj Jain, Chairman and MD, who's joining us on the show right now. Hi, Mr. Jain. Thanks a lot for joining us. Good afternoon to you. Could you take us through your quarterly performance if the numbers are out on the exchanges?
Sure. Good afternoon. Thanks for having me on your media. So our results for the Q4 for the fiscal 17-18 are a revenue of 173 million, on which we have a loss of rupees 9 million. And what I would like to focus your audience on is when we look at our 17-18 fiscal as compared to the 16-17 fiscal, we've had a revenue growth in constant currency of 11%, which we are very pleased about. On a quarter, same quarter last year, Q4 with Q4 this year, we've had a growth of 13%, and a quarter-on-quarter growth, that means Q3 to Q4, we've had a growth of 8%. So overall, our strategy is working towards the growth. 24 months ago, when we announced our medium to long-term strategy, we had said we are transitioning from a one dominant client to a diversified strategy of having products and platforms. In the past 1 year, 4 of our platforms have come into being in business and ready for action. So the first platform we built was for Government of India, called the UPI platform. That's been delivered to them. That platform is doing about 200 million transactions a month level now. The second platform our software built is the BBPS, the bill payment platform, and that is public launch and already doing several million transactions a month, expected to grow hugely higher with potentially 500 million people on that platform. Thirdly is the platform that which we have white labeled to one of the top 5 banks in India, and that platform already has 28,000 merchants on it. The fourth platform, which will be hosted by us, is in the beta stage, and that is our digital merchant acquiring platform. That will be public launched in the next 90 days to 120 days.
So if this is the kind of business momentum that you are having, and you want to have some insight into what you'll do in FY19, what can we expect? The Q4 hasn't turned out optically to be that great. How would FY19 look like?
So Q4 actually has been pretty good, and the reason why, let me point out to you, is good, which the numbers do not tell you, the reported numbers, is because we've had one-time items in our last year fiscal, like sale of a platform from parent company to our subsidiary company. We've had a revenue of a hardware, which we do not normally indulge with. It is SI activity, system integration activity, as a part of the bill payment platform for Government of India. And number 3, of course, is the other income. What we keenly look at is really our business operational income, and that's where we are showing a consistent growth in constant currency terms. And in 18-19 fiscal, we will definitely achieve in the region of 11 to 15% in constant currency growth terms. And I also want to emphasize that what is important is that all the investment that we are making in building our platforms and our digital assets, they're all being written off at the same time in the same fiscal year. So no carry forwards of any capital investment. So therefore, when you look at a company in the last 12 months, we are richer by the platforms that we have already invested into, which are now ready for monetization, during the fiscal 18-19 and onwards.
All right, Mr. Jain, we'll leave it at that note. Appreciate you joining us today and taking us through your Q4 earnings, and all the best for FY19.
Thank you so much.
All right. Moving on to the Fab 4 stocks of the day, and to take us through the same as usual, Yash Upadhyay is joining us. Hi Yash, good afternoon.
Good afternoon, Navneet. It'll almost be criminal to not have a metal stock on a day like this. So we kick things off with Hindalco. This one had gained more than 8.5% or almost is up 9% at this point in time. Its highest intraday move since November of 2016 as fears of supply tightening following the US sanctions have pushed up aluminum prices to multi-year high. Phoenix Mills is up about 4% after Motilal Oswal came out with a report initiating coverage on it. Now they have assigned a buy rating and have set a target price of 732 rupees, indicating a return potential of more than 20% from its previous day's close. Now they believe that there is a huge growth opportunity in the Indian retail industry and that Phoenix Mills is the best place to ride on the Indian consumption story. They expect the company's revenues and net profit to grow at a compounded annual growth rate of 15% and 37% over FY18 to FY20. It's raining orders for Vascon Engineers. This one has gained as much as 4% today after the company said that it has received a work construction order for the construction of a residential township in the city of Navi Mumbai for a total consideration of about 119 crore rupees. Now with this, the company's overall order book increases to more than 600 crore rupees, and the order is expected to be completed within 21 months or about 2 years or so. Finally, cement stocks have been trading in the positive. We had ACC come out with a good set of numbers. Ultratech had gained more than 4% today after the company said that it has commissioned a greenfield plant in the state of Madhya Pradesh, having a capacity of about 2.5 million tons. Back to you.
Well, thanks a lot for that. Yes, Ultratech was arguably one of the standout performers of the day. And then a clutch of other names. Look at, for example, Jamna Auto at 6.5, 94 points. It's one auto component name that has just generally zoomed. You can't play the CV space, you play it via the Jamna Auto stock. Chambal Fertilizers, 7.5%, 191, trading at fresh highs for itself. And VIP, the management told us today that this is the best economic condition that he has seen in the last 30, 40 years. That's a really tall statement. Let's ask this to Mayuresh Joshi and then take in some final thoughts from Bala as well. But just an initial thought from Mayuresh Joshi as well. Mayuresh, good having you. Thanks much for joining in. Companies like VIP, Mayuresh, for example, or the aviation companies, just everybody seems to be traveling and everybody seems to be feeding off from there. I mean, for Dilip Piramal to say that this is the best situation economically for VIP as a company in the last 40 years. That's a really telling statement.
Absolutely, Neeraj. And again, I think this is one space that we had liked in the past. We did mention VIP along with Safari Industries a few weeks back, and the movement in these stocks have been astounding. Now, if you look at the entire luggage industry in general, I think it's a 9,000 crore odd industry with a huge market for the unorganized players. And three players probably dominate the market. So VIP is a dominant leader, followed by Samsonite, and then it's Safari Industries. But what has probably happened, both in terms of traffic flow, both in terms of the domestic travel as well as outbound travel, you're probably going to see heightened activity happening, and that would probably reflect very, very positively in terms of volume growth. As far as their business model is concerned, I think it's an asset-light model. So to that extent, again, the volatility that we probably see in terms of raw material prices or the product in general, again, I think it's very well controlled at that end. And again, the balance sheet is extremely strong, both for VIP and Safari Industries. Again, the different categories that they possess, both in terms of the backpacks or the suitcases or the heavy luggage bags as well. I think there is incremental demand which can grow, and expect volume growth to also probably grow at that same rate. So I think top line growth, bottom line growth can be really humongous over the next few quarters. Valuations, one might argue, a little bit on the higher side. But again, I think as a space, this is something that we continue liking. And as I mentioned, I think I had mentioned Safari Industries a few weeks back, but the moment has been pretty astounding. VIP was a long-term favorite of mine. We do hold it in our portfolio. So largely, I think remain positive on this space.
Mayuresh, what would be the target price on VIP? Just wondering, because the stock has gone up so much. If somebody is holding for the last 1 year, should they be booking profits, or there's still more room or headroom for upside?
So afternoon, Navneet. No, the kind of returns that the stock has given over the past 12 to 15 months, as I said, is very, very astounding. But let's again assume certain facts. Let's assume that volume growth will be in excess of double digits. You're probably going to see top line growth and bottom line growth, which is going to be far, far better. And as I mentioned, I think because their balance sheet inherent strength is so strong, and because they've got an asset light model, I think it's very easy to dynamically change as per conditions. Now, what we're probably looking in terms of trends, as I said, both in terms of domestic travel as well as outbound. And the next 2 months, probably the summer vacations are the best times that these companies do enjoy. So you might have seen some discounting factor come through. But again, I think GST, the implementation of the e-way bill, I think a part of the business of the unorganized players shifting to the organized players, that will give it the volume impetus and the leverage that they need on their balance sheet. So again, I think an investor who's probably holding on can hold on to the stock. Obviously, the gains that he's probably done or made in the last 12 to 15 months cannot replicate. But I think it's going to be a steady compounder going forward as well.
Okay, so one can look to hold on to VIP is the advice coming in from Mayuresh. Jay, Tata, Alexi, you had given a buy call in this few months back, and I guess your target was somewhere about 1100 rupees. We've crossed that mark in today's trading session. Would you advise people who were holding on to this to book profits at current levels?
No, I think we should continue to hold. I think I'll revise the upside target about 1215 to 1300. I think so. I think it's very likely that it will take out the all-time highs at 1120 probably tomorrow. So and it's finishing near the high of the day, so which is always a bullish sign. So it could be as quick as tomorrow. And the upside targets are the chart structure says that it's unfinished. So basically, you should continue to hold on.
Jayesh, any closing, Jay, any closing thoughts before we thank you on the index, which is lying absolutely dormant, but maybe on some specific things that people should watch out for tomorrow or for the next few days?
Yeah, IRB Infra is looking pretty attractive. It hasn't done much from 2015, and now it's starting to look like it wants to break out of the range that it's been for the last 2.5-3 years. So watch out. Maybe it can be taken as a buy today, sell tomorrow call. And once it takes out the 2015 highs, I think it's likely to go somewhere close to 400. So it's in the direction of the longer term trend. So this seems to be a good name, and it's not in the sectors that's been active in the last few days. So it might be a good rotation strategy.
Okay, that's a call coming in on IRB Infra. Remember, that's in the F&O ban, but it's also very close to coming out of it. 83% was yesterday's open interest as a percentage of market-wide position limit. Thanks a lot, Jeff, for joining us and taking us through your technical views on the markets. Well, the other stock which Neeraj highlighted just a while back, Radico Khaitan, that's now trading with gains of almost 10 to 11%. Mayuresh, at 420, 10% higher for Radico Khaitan. Any views here?
So again, I think if one really assumes that the entire consumption story is going to probably move higher in terms of both volume growth as well as realization-led volume growth, I think that is one story in terms of the liquor stocks that can be played out. But again, I think the move has been pretty astounding for this stock as well. What we've probably seen in terms of both the highway ban woes, the GST implementation with destocking, restocking, I think all these issues probably are behind them in terms of even the rates that can get applied and the E&A prices, which are looking far more stable at this point of time. I think it's the supply footprint that would do the magic. So again, the premiumization story, the supply footprint, the E&A prices probably stabilizing at this point of time, giving support to their EBITDA and operating margins, probably abetting their bottom lines as well. So yes, I think volume-driven realization growth is how I would probably see it. So again, I think it's the same thing. The movement has been too sharp, so anybody holding can clearly hold on.
Well, that's about Radico Khaitan. If somebody is holding, you can continue to hold on, and that's also hit its fresh lifetime high in today's session at levels of 420. Well, it's time that we take a look what the dealing rooms are recommending in trade today, and to take us through the same, Yatin Mota joins us with his channel checks. Hi, Yatin.
Thanks for that, Navneet. And, steel stocks, of course, metal stocks are in focus. All of the aluminum boys are up, but steel also is witnessing some bit of short covering on the back of action that we've seen in aluminum stocks. So, JSW Steel, dealers are indicating that a lot of short covering in steel stocks. That stock is up 4% on decent volumes, almost 80 lakh shares traded so far. ITC also, that is one company which is in focus. Yesterday had significant traction. Today also marginally up. But dealers do believe that on a positional basis, tobacco companies should do well. ITC is something which they believe, is one of those stocks in the FMCG basket which can outperform significantly from here on. So they are recommending a positional buy here. And finally, watch out for Jamna Auto. On the back of HNI buying in trade today, we are looking at the stock which is gaining smartly, almost 7% up for that one on a decent volume of nearly 75 lakh shares. So good volumes, and dealers do expect that HNI buying would lead to continuous momentum on the positive side for the stock.
Interesting. Thanks a lot for that, Yatin. Brijesh, you want to come in on Jamna Auto, for example? The stock doesn't really fall too much and tends to bounce back very quickly, now trading at new highs. Do you look it up on the charts?
Is this question for me?
Yes, Brijesh.
Yeah. See, no doubt, Jamna Auto has been consistently moving from a level of 75 or even from 85. It's a one-way rally, and the previous swing high has been crossed. That is 91. So if someone is looking for a 91, someone has bought it, and keep a stop loss on 91. I'm looking stock touching 3 digits. That is, I'm talking about 100 level in coming session to come.
Interesting. Mayuresh, do you look at this one fundamentally, Jamna Auto?
Oh, I had, and again I think it's the same story if I do a comparison stacking of the moment that it is done in terms of stock price. But a large element in terms of how their business model is and the expectations of how the top line is expected to grow. I think it's a decent pace that the company is growing. Now, on a comparative check, if you look at valuations 3 to 6 months back and now, I think the valuation is probably looking far fairer at this point of time. So I think we are remaining very, very selective in terms of the autoing space at this point.
Interesting. Mayuresh, I know I asked you about VIP, but I'm forced to repeat that question on the luggage space simply because you gave a fantastic call on Safari. About a month ago, the stock was probably at 510, 20, 30. It's gained almost 40% in the last 1 month. Are valuations too demanding now for a Safari Industries? For somebody who heard you and bought on your recommendation and has gained 40% in a month, which is astounding returns, what would you advise?
Again, I think a large element in terms of this move has been surprising even on my part. But again, I think the way their business model is shaping up, the acquisitions that they've done for the backpacks, school bags, I think these are going to be value accretive acquisitions going forward. And what it does in terms of their financial is, in our own expectations, is a 23% top line growth, almost a 60% bottom line growth. And again, as I said, I think they are slowly and steadily gaining market share at this point of time. And a part of that market share is going to move towards these 3 big players, so VIP, Samsonite and Safari. Secondly, I think their asset-light model is going to embed their EBITDA margins and their operating margins as well. So yes, I think that price move has probably gestated a lot in terms of what I was expecting. But again, I think investors, as I said, I think the space looks very, very interesting. We are probably heading on to one of their strongest quarters that the stock can exhibit. So I think definitely hold on. Let's look at the numbers to come. Let's look at Q1 numbers and let's generally have a look at the management commentary, and then we'll probably take a call. But yes, investors holding on can hold on at least till Q4 and Q1 numbers.
Mayuresh, any thoughts on a stock that intrigues me the most the last 4 days, Midani?
I know we did discuss this, and again, it's a move that has probably surprised a lot of pundits on the street. But again, what we probably like, the coverage here is not there, so it's very difficult to comment on this part of Midani. But what we really like is Cochin Shipyard, more on the premise of them having very strong ROEs, ROCs, cash-rich balance sheet, working capital days are very, very minimal at around 45 odd days. The kind of order book that it has got and the expectations of their ship repair order book actually burgeoning over the next few quarters with better margins gives us the comfort that margins will improve drastically over the next few quarters. And it's a simple trickle-down effect in terms of their earnings profile. So I think ROEs, ROCEs should expand very, very meaningfully along with strong cash flows, and that would reflect very, very positively in terms of reported EPS numbers on FY19 and FY20 basis. So yes, a very good move by Midani, but what we really like at this point of time would be a coaching ship there.
Okay, well, I think Midani recently signed 2 packs in the Defense Expo, which just took place. I don't know if that's the reason, but clearly it's great going 5th straight day, as my producer tells me, that the stock has been locked in upper circuit. But it's 3:20. Let's get you some trading strategies going from Brijesh. Brijesh, any BTST or STBT for tomorrow's trade?
See, what I have found out is there are 2-3 stocks for BTST as well as for a positional bet. So, like, I'll start with GNFC. It has made a double bottom of 130 to 114, and from there it had bounced back. Now it's been trading somewhere 130, 131. So suppose someone is looking for a BTST sort of thing, keep a stop loss of 128. And as a short-term trader, then your support lies at around 120 to 122. Your BTST target would be 136. If as a short-term trader, I am looking stock touching 150, 152. Another would be Torrent Pharma. It has found a V-shaped rally from a level of 1220, 1222 around, and it's been trading above all the important moving average, followed by volume and breakout with increase in volumes, is giving a bullish sign. At the current juncture, 1390 or 92, it's been trading. One can take a buy call in it with keeping a stop loss of 1380 for the target of 1415. But as a short-term trader, keep a stop loss of 1365. Look for the target of 1445 to 1450. Anything above 1450 on closing basis, stock can jump to 1510. On Tata LXC, I'm looking stock touching 1145 followed by 1185. Here your stop loss would be 105. Anything somewhere around 1105, one can take a buy call in it.
Okay. Looking at stocks at new highs, Radico Khaitan is revving up even more now. 423, that takes it to a 11% gain in the session today. Mayuresh, leave out United Spirits. Let's leave out United Breweries. Let's leave out the 2 larger names. The next set of stocks, be it a Radico, be it all these GM breweries, Som distilleries, Pioneer distilleries, what have you. Is there fundamental merit in owning any of them?
No, as I said, I think the kind of expectation that one has in terms of volume-led realization growth, the premiumization story obviously is playing out for all these marquee liquor companies. And what they have done is they've absolutely moved away from the value products towards the prestige and above brands. So to that bit, again, the realization growth is quite stupendous, along with the kind of volume growth that they've probably seen within these premium brands. The second angle probably is their supply chain distribution footprint, and a lot of companies have been doing that. I mean, just citing an example for United Spirits having an exceptional item in the quarter gone by for actually expanding its supply chain footprint. The third possibility in terms of the extra neutral alcohol prices actually remaining far more stable at this point of time gives the comfort for these companies to report very stable margins. Take again the case of instance, I think GM Breweries numbers were very, very good on the operating front based on all these premises. And the fourth probable angle is that the consumption story, specifically in terms of how these entire brands are perceived, looks pretty robust and stable at this point of time. So again, I think the only issue that they lack probably is pricing power at this point of time, because you're not really sure in terms of how much and in what extent they can take hikes, along with the overhang of a lot of state elections coming through over the next few months, and what actions are probably taken by a few of these states, if any, of alcohol or alcohol-related ban. But again, I think the consumption-led volume growth realization story probably continues for these players. The movement obviously has made valuations a tad bit more expensive at this point of time. But I think all these factors should move in favor of them. So yes, I think Radico Khaitan, as I mentioned earlier, remains a hold for us even at this point of time. But I think buying, you probably need to wait for significant declines. So investors holding on can clearly hold on.
Okay. Radico Khaitan doing pretty well in today's session. The other stock which is doing well is Bombay Burma, as Yatin Mota from my research team just highlighted. Let's just pull up Bombay Burma. That's trading with gains of almost 9%. I think this counter was up 9 to 10% in yesterday's session as well. Mayuresh, I'm going to come to you. A lot of the investors on the street say if somebody wants to play Britannia but the valuations are too high, they can play it through buying Bombay Burma stocks.
Oh yes, that's the one way of probably looking at that. But again, I think if you want to play Britannia, I think play Britannia. I think you don't need to play that through Bombay Burma, because if you're convinced in terms of the growth prospects that Britannia can deliver to you, basically in the premiumization segment, and though you've probably seen some rev up happening in terms of Parle actually ramping up its products in these segments, you're still going to see the market leadership position, at least in the premium segment, continue. The second element for Britannia is the retail supply footprint. And again, I think their clear-cut core strategy of moving into the distribution network through its own retail channels over the next few months, and what is probably achieved over the past few quarters itself is going to lay down the path for reasonable margin expansion. The third factor obviously is their cost optimization. And internally, I think the kind of savings that they've done and expectations of a 230-250 odd crore saving continuing into this fiscal is probably going to abet the overall growth. And fourth, again, I think the management perspective in terms of innovative products that they keep on bringing onto the board, and more products expected to come through, I think that itself should hold up the volume growth in double digits, at least for the next few quarters. So I think stable margins, even though you've seen some input cost inflation over the past few quarters, but that has cooled off, should probably lay effect in terms of reasonable earnings growth. One might argue that valuations probably are not supportive, and I agree. I think valuations probably on the higher side for Britannia at this point of time. But again, the story is a very, very steady compounder. So I think investors who are looking at reasonable double-digit returns can still look at Britannia. But yes, the alternate way of playing Britannia would be Bombay Burma as well.
All right, Mayuresh, we'll leave it at that note. Thanks a lot for joining us and taking us through your views on the markets. Well, just 3 minutes for markets to close. We're about to close almost at day's high level, 40 points higher for Nifty. Let's go across to Neeraj Shah to find out how exactly today's closing is panning out. Some respite, Bank Nifty now marginally in the green and Nifty almost at day's high.
Yeah, so not too bad at close. Again, yesterday it was a bit of a shaken out template compared to what we've seen in the recent past. This is more like what we've been used to in the last 9 or 10 odd sessions, ending in the green, some bit of buying in the last few minutes of trade. So all of that is well. Mid caps and the small cap index, which was up about 0.44%. Look at that. In the last 1.5 hours, this one has gained quite strongly. I would presume that the market breadth would have improved in favor of the advances in the last 1 hour of trade. Now, what's led to the top? I mean, what are stocks index movers first? The commodity names naturally so. So the likes of Tata Steel, Hindalco absent here, Vedanta absent here, but they've done well. Yes Bank amongst the banking names has done reasonably okay. Larsen & Toubro makes a bit of a comeback, so about 1.5% higher. And TCS and Infosys ahead of TCS numbers are up about 1.5%. So good going for both of these. Amongst the losers, actually not too many. Some bit of a pullback for a couple of auto names. But aside of that, not too many on the Sensex. But yes, the Nifty dominated by HP, BP, IOC and Titan. Those are the top 4 losers. They're absent on the Sensex here, but those are the ones that dominated trade on the index names on the losing side. What about the broader markets, Navneet?
Well, Neeraj, there were a lot of pockets which performed well, and we know by now that the metal stocks were shining in trade. But I'm going to start off with Merck, an MNC which rose nearly 18 to 19% in today's session, and that was on back of the global deal where now P&G will be acquiring almost 52% stake in the Indian entity of Merck, which is a part of the global deal. So that stock went up nearly 19%, just missed hitting the upper circuit there. From the metals pack, the PSUs, Hindustan Copper Shipping Corporation also actually, that did pretty well. 12% higher for Hindustan Copper. Shipping Corporation also surged in today's trade. That saw gains of nearly 11 to 12%. Remember, that's closing around the day's high mark, which is always a very positive sign. Radico Khaitan, we've been discussing that stock all through the show today, how it touched its lifetime high levels. It was up nearly 10 to 11%. Well, we'll still wait and watch out for the numbers, because remember, the Q3 was a bit of dampener after a good Q2 that one saw for the alcohol companies. Nalco, the aluminum maker, gained gained the most among the aluminum companies today, and the reason for that is it's an integrated player, and it saw gains of nearly 8.5% towards the end, closing off day's high, but still substantial gains coming in for National Aluminium. Gestal, which is in the futures and options market as well, that stock surged in the last hour of trade, as the intraday chart will suggest, and almost closing at day's high with gains of nearly 5%. You also had something like Apollo Hospital that saw gains of nearly 4 to 5% on the future side. There was some bit of short covering seen for this one as the open interest fell. So watch out for this counter in tomorrow's session. On the losing side, just want to highlight Dhampur Sugar. Well, the sugar stocks have actually been beaten down. Beat Dhampur closing at day's low. You also had something like Balrampur Chini. After coming out of the ban 2 days back, we've seen fresh shorting coming in into this counter. And finally, you also had Bharat Financial. That saw some bit of selling pressure after IndusInd Bank also declared its number, and I guess the management highlighted the merger will take place somewhere in the middle of FY19 or mid of July is what they highlighted.
Yeah, let's see, and the impact thereof. Remember, both the stocks actually were trading close to fresh highs just a few days back. But on balance, I mean, I like this, Navneet, from a bull's perspective. A back of a return to normal after yesterday's pullback. So some bit of a pullback in the Nifty 50. I don't know if the Nifty Bank also showed a similar trend or no, but the market breadth would be really interesting to notice, because the mid caps and the small caps certainly did that. Yeah, a bit of a pullback for the Nifty Bank. But the advanced decline ratio, I think that would be the interesting one.
In favor of the advances, really. But still in favor of the advances.
Yeah, but you know, interesting, because if you pull up if you can pull up the small cap index or the BSE mid cap index, I would guess that you would see a bit of a spike in the last 45 minutes to 1 hour of trade. See, I mean,
almost a day's high.
Yeah, and it happened in the better part of the last 1.5 hours.
I think if it's possible to pull up any 500, BSE 500 or NSE 500, that gives a better picture of the broader markets. That tells you almost 500 stocks there. That also ended at day's high. So definitely market, there was still some bit of selling which we saw, but I think after yesterday's market breadth, I think today was the day when it was positive. So not bad. Yesterday was the day when it was more of a profit booking day after rallying for almost 9 trading sessions.
Yeah, more so in the Nifty Bank, but that's true. The turnover would be high, I'm sure. I mean, you would have the F&O turnover being very high. Yeah, the cash market turnover picked up a little bit as well. We not crossed 30,000 crores, which is actually pretty good. The F&O turnover now need par for the course on a day like this.
Yeah, it was the day for the Bank Nifty weekly options to expire, but we've also seen days like 14-15 lakh crore of turnover. So 12 crore is just fine on a day like this. But as NSE cash turnover has picked up, I think in the last 4 to 5 sessions, it was hovering between 27-28. Today it's crossed the mark of 30,000.
And Hormuz, if we can have the MRR function for the NSE 500 out here, because that is what will show, as Navneet was saying, the kind of movers and gainers at the broader end of the spectrum. You probably still have maybe an OMC out there coming in, but if that set of stocks comes up, you will see a list of companies which lost out big time or gained big time. So yeah, I'm not wrong, Navneet. The OMCs do feature there, but a couple of other stocks as well.
Yeah, you got OMCs are there. Alongside, you've got something like these names feature almost every day: Bombay Rayon, Bhushan Steel, Indian Oil, and Gulf Oil. But on the gaining side, I think the gains have been pretty good in today's session. The list will be dominated by metal counters. We've seen Hindustan Copper being there, and Merck actually gained on back of that global deal which was announced today.
Yeah, that's very interesting. Just last 2 observations. One is Balrampur Chini Mills, a beaten down stock, correcting another 5.5% because sugar prices have gone down even further than what they were yesterday. I think they are sub 2,600 now, from highs of 3,200, which is a substantial fall in sugar prices. So beaten down stocks get beaten down. And mind you, after what's happened in Electro Steel, we've had corrections coming in Bhushan Steel and Monet Ispat.
2 days.
Both of them are down today. Monet Ispat too has corrected very strongly today. It's amongst the top losers on the small cap space.
Which tells you that there's basically there could be no equity value for the current shareholders of Bhushan Steel. But let's see. We don't know how the final pans out for at least these 2 players. But definitely for Electro Steel, that was the verdict.
Yeah. Okay, final thoughts. And Brijesh, one final thought from you really. Based on what you've seen over the last few sessions, what's the upper cap that you give to the Nifty or the Nifty Bank in this current mood before we could see some bit of a correction? Because yesterday too, while the Nifty Bank corrected a bit, we didn't have any major corrections in the Nifty or the Sensex.
See, if we talk about Nifty first of all, then the Nifty on a 4-hourly chart has been trading in a bullish bull wave pattern. Now with this thing pattern, then the targets is somewhere around 10,700 to 10,725. Now there is a mild resistance at 10,620 to 10,625. So I am looking that level to be touched by say Wednesday or Thursday before the profit booking comes. Now the downside, it has a support at 10,450 to 10,440 level. But looking at the closing and the rollover of the data, it looked like Nifty would be holding 10,500 first of all, or say 10,500, 10,525 would be the first level on would be holding on. And on the higher side, 10,600 or 625 would be the first level to watch. So as an aggressive trader, I'm looking like 10,500 holds on, then definitely 10,625 would be the first level to might be achieving before any profit booking comes. Now, if we talk about the bank Nifty, it has a support at 24,900 to 24,950. That should not be broken for the momentum to continue. But it has a resistance at 25,450 to 25,500 odd level. Now, if we trade, if we hold on the 25 level, 25,000 also, then that also would, as a psychological level, that also would be fine. And if we trade in a range of say 25,100 or say 24,900 on a downside, followed by 25,200 or 25,250, then also it would be good for the momentum to continue for the bank Nifty.
All right, so we'll be watching out for those levels, and let's see if there are more legs to this rally or not. We've recovered nearly almost close to 600 points from the lows that one saw towards the end of March. Brijesh, appreciate you joining us today and taking us through the technical views on the markets and also on the individual stocks. Well, with that, it's a wrap on this edition of Countdown. Don't go anywhere. Up next, we wrap the day's trading session in Bloomberg Quinn's Market Wrap. Stay tuned for that.